traders and market movers. This is The Pulse with Francine Lacqua.
Tuesday, good morning. I'm Guy Johnson. I'm in for Francine. This is The Pulse. Let's talk about what we're seeing in terms of the European stock market story this morning. We're ticking up a little bit. Still feels fairly quiet. We are digesting Jackson Hole. We continue to kind of think about what is happening there. But we're really counting down to the main volatility of the event of the week, which, of course, is going to be the NVIDIA earnings tomorrow. As I say, Sharon Bell, Senior European Equity Strategist at Goldman Sachs, sitting around the table with me this morning. Good morning, Sharon. Nice to see you.
Hi there. Good to see you.
Rate cuts are coming. Does that mean I rotate into different areas of the market?
Rate cuts are coming, I agree, although you're saying it, everyone's saying it. It's the expectation. So you'd think that the market would have already rotated that way in expectation of rate cuts. I think that's why, after the correction we had earlier in August, we have seen markets bounce again, because they now believe that actually the Fed is going to come in, cut rates, not too worried about inflation. I think to get a real rotation into, say, more cyclical stuff, which had performed really well at the beginning of the year, but sold off in the last few months on weaker, more mixed economic data, you'd have to see a view that the economy was picking up more broadly, including China and other places, rather than just rate cuts.
So it's interesting what rate cuts are signalling. The market seems comfortable with the idea that the Fed can now deliver a soft landing. That seems to be the takeaway from Jackson Hole. The kind of the soft landing narrative is in place rather than something more dangerous and concerning. Yes,
I think that's probably fair, and that would be our view as well. We think that the chance of a recession in the US over the next 12 months, we put it at about 20%, which is a little bit higher than normal, but really not very much. It's certainly would be far from our base case that you get recession. So we feel that the markets are right to start pricing in a slightly softer landing rather than a weaker one. That all being said, is that really enough to kickstart cyclicals? If it's just a soft landing but not very good growth, then maybe you want to more broadly diversify and not just be in, say, more cyclical economy-geared sectors.
If you do see rotation, do indexes come lower?
You mean rotation out of tech and things like that? Yeah. I mean, I do think tech has got its own drivers. As you mentioned before, it really matters what happens to earnings. We get earnings this week, for example. So I think for tech, what really matters is that. If you saw a big change in interest rate expectations, maybe that would make a difference. But generally speaking, I think tech has got its own drivers, and that's really individual earnings and expectations in AI and that space and that sector. I think for a broader rotation in the market, you need to see this narrative of soft landing shift. Either growth was going to be just much stronger, or alternatively, the soft landing no more, and we go into a deeper downturn. So as long as we're in this kind of mixed environment, I think it'll just be a bit more of a mixed picture in terms of who performs.
Do you think we see another big volatility event between now and Christmas? Do you think volatility has subsided and will stay down?
Yeah, there's always a risk related to the fact that the US market is expensive versus its own history and very highly concentrated in 5 or 6 companies. And that always creates an additional risk. Even if you take the biggest companies, their volatility on individual days can be 10 or 15%. That's not normal to see companies sell off or rise that much on individual days or weeks who are that big and that large portion of the market. So always bearing that in mind. So the economic backdrop, I agree. If you just told me, this is the economic backdrop, no recession, interest rates coming down, I'd say volatility can be well capped on the upside. It won't rise again. But if I look at the constituents of the market and the valuation, I'd say that's a little bit riskier.
I'm looking at the PMI data out of Europe, and it's telling me a fairly bleak picture. I spoke to the IFO Institute on this programme yesterday, telling me a bleak picture about what is happening at the heart of Europe in terms of the manufacturing story. Where's the opportunity in Europe around that?
Yeah, it's interesting, isn't it? And we've had sort of detail of German second quarter GDP, and investment looked incredibly weak in Germany, which is, what I'd expect, given the sort of confidence data that you see out there. People don't invest if they're not confident. The PMI surveys are a reflection of that lack of confidence. They're particularly weak in one area of the economy, which is manufacturing. Services. So the more manufacturing your economy, and Germany is got a big chunk of manufacturing, 20% or more of the economy, it's also the most volatile element of it. The more manufacturing are, the weaker you are, and that's where Germany is suffering. Whereas, say, Spain is growing just as fast as the US, sort of 2.5%, 3%, reflecting its very, very different mix in terms of the economy.
Do you think that services side story, though, is driven by tourism, which is going to run out of a little bit of steam here at the moment? Like, it feels like there's a couple of kind of idiosyncratic stories around Europe at the moment. Services, which has been very strong through this summer.
Yeah.
And you wonder about the sustainability of that, given what we're starting to see, particularly the US consumers beginning to roll over a little bit, the European consumer maybe saving, the German consumer back to that, saving.
Yeah.
A lot of that money has come out of Germany into Spain. But I wonder how sustainable that is.
How sustainable. It's not good. The heart of Europe, Germany, has been so weak. So I do think that sort of dislocation, which you're pointing to, between services and manufacturing, it can't carry on being dislocated forever. Yep. I do agree with that. Having said that, I think there's, the consumer in Europe has got quite robust underpinnings at the moment. Yep. Employment is good. Savings are actually much higher in Europe, as you point out, than they are in the US. Yep. So you're not in that kind of credit crunch situation, and the ECB is cutting rates already. So all those things probably mean to me the consumer in Europe stays reasonably strong. But I do agree, manufacturing is this weak spot, and the longer it stays weak, the more problematic.
Is it a challenge to find good opportunities in Europe at the moment? More challenging. You've done this. You've seen cycles, you know what it looks like. Does this feel different? Does it feel more challenging right now to look at Europe and say, there, and there, versus going to the United States and going, we want to put money in these spaces here?
Yeah, look, I think in some ways I reckon the US is more challenging because you've got 5 or 6 companies, and if you're not in those, and many cannot
you're going to underperform.
Many cannot be full weight in those ones because they end up with their portfolio too concentrated. So in some ways, I'd say the US is more challenging. Europe is on an average PE, totally average valuation, average dividend yield, roughly speaking. Lots of opportunity where some companies are expensive, some are cheap, some have got growth opportunities, some haven't. So actually, I would argue in Europe there's more potential.
OK. And in terms of entry points, are entry points going to make much more of a difference going forward from here? You've had this period where, as you say, technology, you've had to be in technology to outperform. Entry points kind of in some ways have been, therefore, important but less of a factor. And I'm wondering going forward, as interest rates stay more elevated, as we go through into a kind of new phase, that entry points are going to be more tricky but more consequential?
Yeah, this is a good question. And that entry point after the correction in August would have been a great one, wouldn't it?
Is there another one coming?
Yeah. So I think that returns from here, given the... Look, since October last year, almost a year ago, I think the markets are up 30% or more globally. I mean, that's a fantastic return. You're probably not going to see that in the next year. So to your point, I do think returns overall will be lower. You've got to pick your entry points, therefore. I totally agree. And we have had a bit of a bounce. I'm not expecting a huge underlying sort of return on the overall index from here. Only a few percent. On the S&P, we've only got 2.5% over the next 12 months as a target price. It's not very much.
So do I buy bonds?
Bonds are interesting. They give you a much better yield than you got a few years ago, it's fair to say. The problem with bonds, of course, is that governments have a lot of debt and they will need to issue more. Also, inflation. We just talked about labour markets being quite strong. Inflation is likely to be sticky. Wage inflation is likely to be higher in Europe and elsewhere too than last cycle. So that will probably keep bond yields relatively high, and we think US bond yields will drift up again a little bit, even if at the short end rates are coming down. So I just think it's a trickier overall environment for investors to make a good return.
I got euro dollar at 111, 112. Is that a headwind for European stocks?
I don't think it's huge. You mean the rise in the euro dollar? More recently.
Dollar's been weakening, euro's come back up.
But in the end, I mean, the euro hasn't been super strong in recent years. I don't think that's a headwind at all, actually. I think Europe typically does better when the euro is stronger. The reason it does better when the euro is stronger is because that's giving you a signal about how good the European economy is. So when the euro...
So do you think that is sending a signal about a strong European economy?
I don't think it is at the moment. That is fair to say. All I think is that really what matters is economic growth, and China growth for Europe matters a lot too. And the currency moving 4 or 5%, that isn't really the crucial factor. Do you think the stability story has been priced into UK assets now, post the Labour government's arrival? Do you think that trade is done? Do you think there's more to come? I think there may be a little bit more to come there. I quite like FTSE 250, for example, which is the mid-cap index, which is the one that's more exposed to the UK economy. I think that the momentum and their data in the UK is good. The UK is opposite from Germany. It doesn't have a big manufacturing sector, and that means it's just less exposed to those concerns. Great to see you, Sharon. Always a pleasure. Thank you very much indeed. Sharon Bell, Senior European Equity Strategist, joining us from Goldman Sachs. Let's talk about some of the pre-market stock stories that we're watching over in the United States. Paramount down
You can see circa 5%. Bronfman's walking away. Looks like we are going to see the Skydance deal going through. So Edgar Bronfman walking away from that. So basically the price comes down. And that is what you're seeing reflected in the stock story this morning. We're going to talk about another stock story next. BHP expects a turnaround in China's property sector in the year ahead, but plans to zero in on its copper portfolio. The appetite for steel, not great right now. It's plateauing, but the copper story looks more positive and certainly will look more positive in years to come. We're going to hear why. The CEO of that business is Mike Henry. We spoke to him a little bit earlier. That's next. This is Bloomberg.
We believe that the fundamentals remain intact for China to continue its growth beyond kind of its middle income status currently. They're obviously focusing on high quality growth, and we expect that as they do continue to grow the economy, it's going to mean plateauing of steel over time, a constrained iron ore market, but increasing demand for some of the other commodities.
BHP's CEO Mike Henry there. BHP, of course, the world's biggest miner. Shares tracking a little higher this morning, both in Australia and here in the UK. This after the mining giant's full-year profit met expectations, despite actually that lower Chinese demand for iron ore. BHP heavily invested in iron ore. It's interesting that the big miners are still making profits, despite the fact we've seen the Chinese slow down. Martin Ritchie joins us now to discuss. Martin, this is a company that is continuing to do well, and this is despite what we're hearing about the Chinese economy. What is their outlook for the Chinese economy and iron ore demand? It's not just the property sector that consumes that. It's the auto sector. It's the manufacturing sector. What is the bigger picture?
Yeah, as you said, a kind of contrast between BHP's relatively positive results and perhaps some of the commentary in the mood in commodities markets in recent months. Look, BHP really spoke to that. The CEO did speak about the headwinds, especially for iron ore demand. He pointed out that the property sector in China remains weak and probably won't bottom out until next year. That's very important because it used to be upwards of a third of China's steel demand. Now it's down to only 20%, according to BHP, which marks a big shift. And then on copper, they did say, demand slowing quite considerably this year to about 1 or 2%, down from 6% last year. And again, that's due to construction. But if you dig a little bit deeper, there's not really a very precipitous slump in China's steel demand. BHP talks about demand plateauing. And you've seen other sectors, manufacturing, certainly cars are a big steel consumer, and other industrial markets, I guess, take up some of the slack. So all in all, they certainly spoke to some of the weaknesses in iron ore, but also some of the long-term strengths in their portfolio, especially on copper going into the future.
OK, well, let's talk about copper and what happens next. Obviously, we've had the Anglo bids, didn't go through. We're now wondering what happens next. Is the sense that Henry's still interested in M&A, still interested in doing copper deals?
The sense is very much that they're still very interested in copper and increasing their exposure to copper by some means. We did ask them directly, I think, on TV earlier about whether there would be a renewed bid for Anglo, which was seen as one of the major routes, I guess, to increase that would have made them the biggest copper miner in the world by a large margin. I think his reply was essentially that wasn't Plan A for their copper business. They were not counting on that and nothing else. There's a focus on trying to expand the assets they've got and perhaps looking at other deals opportunistically. Whether they go back to Anglo in November, when I think they're allowed to under the UK takeover rules, is another question. It remains a very complicated transaction.
Is it in past cycles, when China rolled over, the miners rolled over and were sort of unable to deliver profitable growth? This time round, we're seeing the miners able to deliver profitable growth, even as we see a Chinese slowdown. What are they doing differently this time round that they didn't do in the past?
You know, the BHP and Rio and the majors have always been making money with iron ore prices. You know, in the last, say, 10, 15 years, because they have such a low cost cost position. Sorry, they have grown so large, and their costs for producing from these vast mines in Australia are extremely low, and that's the same principle broadly applies to copper. So even though prices have come down by a fairly big chunk, especially with the iron ore, they're still making a lot of money in that. They're still making very fat margins. And then on copper, you know, prices are actually up this year. All the kind of negative commentary set aside, you know, the market is still growing and prices are still relatively high, and that helps a kind of low-cost miner like BHP.
Martin, great to catch up. Thanks for the update. Really appreciate it. Bloomberg commodities reporter Martin Ritchie joining us on BHP. Let's turn to one of the other commodities we watch, of course, and that is oil. You are seeing a little bit of a fade in the move we saw yesterday. There was concern in the market yesterday surrounding Libya. The market seems to have kind of once again come to the conclusion that actually this isn't a bigger factor that we thought it was initially. You get the kind of the headlines coming through about concerns about supply. The market's getting used to that Libyan story and therefore is working around it. The story that really stood out for me in oil yesterday came from Exxon, which sees 2050 oil use at current levels, despite our net zero goals that we currently have. And that tells you a lot about kind of where investment will still need to be made in order to provide the supply. And if that supply weakens off, you could see prices going significantly higher. So I think it was fascinating what Exxon had to say yesterday about the outlook story. Anyway, oil this morning fading a little bit. Let's turn to the new oil next. We're going to talk about what's happening with tech, a roundup of some of the day's top tech stories, including Mark Zuckerberg claiming that Meta was pressured by the White House to censor comment during the COVID pandemic. We'll talk about all of that next. This is Bloomberg. We're about 34 hours away from the NVIDIA numbers. It's going to be the big event of the week, so it's probably time we talk tech. Let's start off actually talking about what's happening with Apple. Apple has sent out invitations for a product launch event. It's going to happen on September the 9th. The company is expected to announce details of the new iPhone 16. The theme, though, of the event is apparently glow time. This, we understand, is a reference that we're going to be hearing a lot more about regarding the interface that is going to be used by the new Siri digital assistant, i.e. AI, is going to be a big feature of the landscape. We're going to get the new 16. I think we're going to get some new sort of peripherals as well. I think they're going to get an update also on the Apple Watch. Meanwhile, Apple says longtime CFO Luca Maestri will be stepping down. It's part of a planned succession. He is going to hand the role to his top deputy Kevin Prakash. That is coming up. We'll look forward to the impact that could have on its numbers. Telegram CEO Pavel Durov is being questioned in France over claims the messaging service failed to properly fight crime on the app. The Paris prosecutor's office is looking into allegations including refusing to help authorities run legal wiretaps on suspects and enabling the sale of child sex abuse material. Meta CEO Mark Zuckerberg says the White House, quote, pressured the company, the social media giant, to censor content related to the COVID-19 pandemic back in 2021. Zuckerberg adding that he regrets not being more outspoken about this in the past. It comes, of course, amid growing global debates over how social media companies should be policing content posted by their users, which takes us back to that Telegram story. We are going to be hearing from the NVIDIA CEO tomorrow. That's going to be fantastic. We want to hear about that. Up next, we're going to talk about what is happening in the Kursk region. This is Bloomberg. We're approaching half past the hour. Welcome back. You're watching The Pulse. I'm Guy Johnson in London, in for Francine Lacqua. Let me just update you on what our key stories are this Tuesday morning. European stocks edging a little higher, despite tech concerns weighing on Wall Street last night. Investors are clearly now waiting for Nvidia earnings, which come after the bell Wednesday. In the commodity space, BHP is gaining in London, the world's biggest miner, planning to zero in on its copper portfolio. This is China's appetite for steel under a little bit of pressure, and Russia launching a massive air assault against Ukraine and its energy infrastructure. Meanwhile, the UN's atomic watchdog heading to a nuclear power plant in the territory seized by Kyiv recently. We're talking about the Kursk region. The IATA warning about a Chernobyl-like accident and the potential for it in that region. So let's get more on that last story. The head of the UN's nuclear watchdog has now arrived in Russia, in the Kursk region. He's heading to the Kursk nuclear power plant. He may already be there. We are watching for updates from the TASS agency, the state-owned Russian news agency. The head of that visit, Rafael Grossi, spoke to Bloomberg last week, reiterating his concerns about the risks surrounding this nuclear plant.
They do not have a protecting dome around them, which means that the core, the reactor's core, is pretty exposed. And when you add up this fact to the issue that you have advancing troops, objectively speaking, within artillery range, then this, of course, is a source of enormous concern to me and for the agency.
Rafael Grossi speaking to me last week. Joining us now, Bloomberg's Jonathan Tyrone, updating us on what is happening here. So, Grossi warning last week about a Chernobyl-like accident that could happen because of the lack of protection at this Kursk nuclear plant. Talk about what is happening this morning. Is Grossi already there? What is he expecting to find?
Well, Grossi's there. What he's going to find is Russia presenting the evidence it's compiled. They've been accusing for months that unmanned aerial vehicles, rocket debris has been found near the site of the plant, near spent fuel ponds. The fact is, this is a sprawling facility. It has 2 reactors that are being decommissioned. It has 2 reactors that are in operation, and it has 2 more highly valuable new reactors that are under construction. It's highly unlikely that Grossi himself or his team will be able to see everything on this trip. So the best that he'll be able to do is open lines of communication with the plant operators, assess the evidence that is presented, and perhaps build a monitoring mission moving forward as long as this plant is in the front lines of the war.
How big a risk does this plant represent? How worried should Europe be?
Well, look, I mean, Grossi himself invoked the 1986 Chernobyl accident because the RMBK reactor design in operation in Kursk is the same Soviet legacy design that was in Chernobyl. So, it's a fundamentally flawed design by modern standards where safety is highly prized because it does not contain this, massive steel and concrete dome that sits over every modern reactor and is there to contain, radiation in the event of an accident. If something were to happen to the core, then it would be hard to contain that radiation. That being said, this is a target-rich environment. There's not just the reactor core. There's spent fuel ponds. There's the operating center, and there's this multi-billion new reactor that the Russians are building and want to bring online. In fact, at the beginning of 2025. So, this is a large and complex site that does pose danger because of the narrow margin for error in the middle of a conflict zone.
Jonathan, thanks for the update. We'll continue to watch for those updates. Thank you for joining us throughout the morning. Jonathan Tyrone joining us on what is happening in the Kursk region this morning. I want to take you to China. Jake Sullivan, the National Security Advisor of the United States, is meeting the Chinese Foreign Minister Wang Yi in Beijing. He landed a couple of hours ago. We are going to see the more significant of formal meeting taking place tomorrow. But you're looking at live pictures coming out of Beijing as Jake Sullivan arrives in China. I want to take you back to the Kursk region, to what is happening in Ukraine right now, though. Another event that that we're going to be watching out for this morning. The Ukrainian President Volodymyr Zelenskiy is going to be holding an extended press conference today. He's been indicating over the last couple of days that the country's energy infrastructure has suffered significant damage. This after Russia fired more than 100 missiles and nearly as many drones at power facilities across the country yesterday. The latest attack, of course, comes as Kyiv continues its incursion into the Kursk region. We were just mentioning that part of Russia. Joining us now, Elisabeth Braw, who is a senior fellow at the Atlantic Council, joining me around the table. Good morning.
Good morning.
So we have a nuclear facility in the Kursk region that looks like it represents a major threat. We have a dam near Kyiv that is being maybe not targeted, but is in certainly significant jeopardy. What is the risk that we see? How high is the margin for error right now? How much risk are we running here that we could see a major event which could have a significant impact on the tide, the way that this war is going?
The risk is that any of these energy facilities or power facilities, even if they are not all, if they don't all collapse, if one collapses or is damaged, then that is a major calamity in itself. So if you look at that dam, for example, if it breaks, even if it were not deliberately, wasn't deliberately targeted, if it breaks, that is hundreds of thousands, if not millions of people who will be affected. And we see that sort of attack constantly happening now, of course, in concentration, because Russia is trying to turn the tide and also turn the narrative of the Ukraine war, showing that it has the initiative and it's not too ashamed to target energy infrastructure, which is a very frightening position for the rest of us to be in.
Does it have the initiative?
It's trying to show that it has the initiative.
But does it? Do you think it does?
It does in some areas, but what Ukraine has managed to do in the Kursk region is to show that even though the sort of official front line is to Russia's advantage at the moment, Kyiv or the Ukrainians can think innovatively and create an advantage for themselves. So that's why Russia is on the back foot and again isn't too embarrassed to target energy infrastructure to show that it has the initiative.
Does Russia care about how the rest of the world perceives these attacks?
Not at all. And that is the frightening thing about this war. Ordinarily, you would see two warring parties try to stick to the rules and what is considered respectable warfare. Russia, by invading Ukraine, has demonstrated that it doesn't care about global public opinion, doesn't care about international laws and rules. And that's why it has this enormous freedom to do what it likes, because it has essentially already said, we don't care what you think, and we'll keep going along those lines.
Ukraine is indicating that it is being held back. That it is being held back by the rules and regulations that are being put on the use of weapons that are being provided by its Western allies. Is that a fair point?
The Ukrainians have a point in saying, as they do, that it's not fair that they should have to stick to not just international rules, which any respectable country would want to do, but also the rules that Western donors have imposed on it for the use of the weaponry that the West is donating. And the Ukrainians are saying, why is it that Russia gets to strike wherever it likes within our country, but we are limited? And it's also making the comparison with Israel, which doesn't have such a strict rules imposed on it by the countries that provide it with weaponry. Israel
has learned the lesson that you ask permission later. You do, and then you kind of retrospectively kind of get the clearance, particularly out of Washington. Is Ukraine learning that lesson as well?
The Kursk incursion is a very strong indication of Ukraine learning that lesson. It didn't ask for permission, and it certainly didn't coordinate the incursion. It just did it. And then what were Western donors going to say afterwards? They couldn't very well say, well, you shouldn't have done that. So they sort of went along with it, even though they were not involved in the planning or asked for permission. And I think we may see more of that.
I was about to say, does that tacit acceptance by the donors encourage Ukraine to do more of this?
I think it will, and we've already seen Zelensky being very clever. For example, in asking for donations, he says thank you in advance before having received the donations, and so now he clearly said we'll go ahead and then we'll ask for permission after we've already done it, when they can't very well deny us the opportunity to do it. So I think we'll see more of this, also because it really isn't fair for Ukraine to be bound by these rules when Russia proceeds with impunity.
Is Ukraine in a rush to do what it can do before Trump arrives potentially in the White House?
Ukraine is in a rush for several reasons, not just the U.S. election, but also the U.S. election. It's in the rush also because it is under duress when it comes to the supply of soldiers. It can't just sort of conscript or recruit prisoners out of prisons. It's not what a respected country does. Russia does it. Ukraine can't do it. So it is running low on soldiers, which is why we have seen this long-running debate in Ukraine about whether they should lower the conscription age so that they could bring in more young men. But it is in a rush because human lives are limited, and that's why. Not for the reasons of personnel supply to armed forces, but also for reasons of morale, it has to show that it's making progress.
And presumably that's got to be a problem for Putin as well, for Vladimir Putin, given what is happening in the Kursk region right now.
I think one issue to watch very closely is how conscripts' mothers react to their sons potentially being involved in fighting in the Kursk region. The way the Kremlin has sold this war to the public is you won't be inconvenienced. It's a war that will affect the Ukrainians, not us. And the Russians have managed, or the Russian government has managed to run the economy reasonably successfully despite Western sanctions. But once conscripts start being drawn into the war and potentially killed in large numbers in this war, if that happens in the Kursk region, then the Kremlin will face angry mothers, and angry mothers have made themselves known before, not least after the Kursk disaster, when they were not too shy to openly criticize President Putin.
Do you get any sense that we are any closer to understanding how this war ends?
We are nowhere close to understanding how it ends, and whether it ends militarily or through negotiations, a diplomatic solution. And there are so many opinions about how it should be done, including very different opinions in Russia and Ukraine. And then, of course, we have the global public opinion and Western governments having their own opinion in addition to that.
Elisabeth, thank you for joining us. We greatly appreciate it. Elisabeth Braw, Senior Fellow at the Atlantic Council. Thank you very much indeed. Coming up, we're going to turn back to trade. Chinese EV makers seeking ways to get around European tariffs. We're going to hear from Expect Strategy updates. We're going to hear from its CEO. That conversation next. This is Bloomberg.
Volkswagen has more strength on globalization, quality, manufacturing, and supply chains. We have more advantage on artificial intelligence, software, and electrical and electronic structure. So I hope we learn from Volkswagen's strength to make up our shortcomings.
The Expect CEO there talking about how his company will learn from its partnership with Volkswagen, and presumably that's why Volkswagen's in this gig as well, because it needs to learn, as we've just been hearing, about what is happening on the software front. This is part, though, of a global narrative that is developing in interesting ways right now when it comes to tariffs. Clearly, the Europeans are partnering with the Chinese, but the Chinese are being excluded from European markets because of what is happening with the tariff front. Canada, the latest country to deliver on that story as well, announcing new tariffs on Chinese-made EVs yesterday. Aluminium and steel products also in the mix as well. Bloomberg's Ollie Crook joins me now around the table to discuss all of this. So the Canadians are the latest. Yeah. They are now joining what appears to be a reasonably coordinated strategy amongst Western powers, basically to lockout feels like the wrong way of putting it, to encourage the Chinese manufacturers to build in their own countries, i.e. not to import but to build domestically. How are the Chinese responding to this?
Yeah, I mean, their line from the very beginning has been that basically this is in violation of the WTO rules, that this is totally inappropriate, and that basically China's advantage is basically just down to the fact that they make just more competitive cars, they have lower labor costs, they have more sorted out supply chains, and that's exactly what we heard, at the beginning of the show earlier today when they were responding. What's interesting is that, Canada has done basically exact mirroring of the U.S.'s sanctions, which is, 100% on EVs, 25% on steel. It's a concern, particularly after what we've been seeing in the steel market within China, where they have a lot of overcapacity. And obviously they're also ideologically aligned in terms of Canada's view of China. We saw, remember, they detained Huawei's deputy chairman a few years ago on a U.S. arrest warrant. But also it's in their self-interest, right? They build 1.5 million cars in Canada, most of which go over to the United States. So you can't very well be accepting sort of cheap EVs from China and also wanting to sell cars into the U.S. without the trade barrier.
The Chinese build a lot of cars as well.
Yeah.
They're now not going to Europe.
Yeah.
They're now not going to the United States. They won't be going to Canada. Where are they going?
Yeah, so what's really interesting is we do have some of that data out. And actually, when we look at what happened in Canada in the month of July, when you compare it to last year, the sales there were down 28%. So that's really sort of telling you the story of kind of where things are going. But when you look at kind of Chinese car deliveries across the world, in Asia, you go year to date, in terms of what we've seen so far this year, it's up 36%. In Europe, they've fallen 14%. In Latin America, though, up almost 500% in terms of the sort of EV deliveries that have happened year to date versus last year. So while they're being shut out of the European market, there's obviously anticipation of what was going to happen in the United States, so they're not really selling there. But what you're seeing overall net total in the world is, EV sales and deliveries across the planet are up 17%.
What is interesting is that Europe is, the tariffs in Canada and the United States are much higher than we're seeing in Europe. Is that because Europe also exports quite significantly to China and therefore probably runs a risk of retaliatory sanctions the other way? Europe feels like it's really caught on this one.
There's a lot of different dimensions here. So, of course, there's also the green credentials. Europe wanting to be carbon neutral. They need to have EVs in order to do that. They don't produce enough of them themselves. They're not at the price that you need to produce it in order to have that. China does help with that. You also have the fact that 36% tariffs is the highest level that you have from Europe. That actually sounds pretty good compared to the U.S. and Canada. And we were talking a little bit earlier about this. The former EU trade minister, Cecilia Malmström, about exactly the dilemma that Europe is in. Have a listen to what she had to say.
The dilemma here is that we need those Chinese cars. We don't have enough EVs at affordable prices, high quality in Europe. So that is why we have not imposed 100%, because we don't want to stop the imports. We just want to slow down so that Europe can catch up. And that is ongoing discussion right now.
So, yeah, they kind of need those cheaper EVs, but at the same time, they also, like the Germans, want to continue to sell into that Chinese market. And, of course, what's interesting is these tariffs are just a delay, right, because it's 2 to 3 years before these Chinese companies...
Well, that's the point. Is this about stopping Chinese cars coming into Europe and protecting domestic suppliers, or is it about saying to China, we want your cars, we just need to build them here rather than there?
Yeah, honestly, I think it's a bit of both. If you ask the German car companies, they say, listen, we want free trade. We want none of this stuff. We want to be able to do it, and we want to compete. And actually, part of the interesting side of this for the Germans is that actually this is in some way the pressure that the German car makers need in order to make some of the really tough decisions to companies that are, frankly, compared to a lot of these Chinese companies, very bloated. And there's a lot of difficulty in terms of, the cost of labor and all of these things, a lot of difficult discussions. And, of course, another difficult discussion is Hungary. When you look at the price of labor in Germany, which is like 62 euros an hour, versus Hungary, which is 16, I mean, that's another part of this conversation. I
remember talking to Elon Musk years and years ago, and he telling me that one of the reasons he started Tesla was to try and encourage German car makers, German engineers, that electric was the future. And we're still not there yet. It's a big challenge. Ollie, thank you very much indeed. Bloomberg's Ollie Crook talking us through what is happening on the car tariff front. Up next, we're going to talk about what is happening on the political front. France's next Prime Minister. The search for that Prime Minister continues. We're going to have the latest from Paris as President Macron rejects the left's wing choice. We still don't have a name, though. We'll talk about it next. This is Bloomberg.
We have lots of voices that are more rational about economic policy that are speaking now and say we need to keep that pro-business policy. And that's why also we are slashing down this extreme left, because what they are offering is just a nightmare for the market, for the companies, for financing our investments, with the spread going up and the interest rate being still high. So we need really to continue the pro-business policy.
Fabrice Lesache, the Vice President of the French business lobby MEDEF, speaking exclusively to us a little bit earlier about the importance of pro-business governments in France. Are we going to see that coming to a conclusion. Are the 7 years of the pro-business Macron period now virtually over? Well, we're about to find out. The French President Emmanuel Macron continuing talks to appoint a Prime Minister. That carries on today. He has ruled out a leftist candidate, Lucie Castet. That is now off the table. But who could be the name that fills the frame? Let's try and find out. Let's go to Paris. Caroline Conan standing by for us. So why the rejection of the left candidate? Talk us through the importance of that choice and where it leaves us.
You know, at the Medef conference also yesterday afternoon, we heard from the President of the National Assembly from Macron's party. She was also saying something similar to Fabrice Le Sachet, that it takes 10 years to build a pro-business agenda, to build a pro-business policy, to attract all these new investments to France, but it only takes a few days to undo it. This is obviously one of the reasons why Emmanuel Macron does not want to nominate a left-wing prime minister, even though the New Popular Front actually came first in those snap elections with more than 180 seats. He knows that the New Popular Front does not have the majority and would potentially face a vote of no confidence. So today, Emmanuel Macron has decided to open a new cycle of negotiations, but we don't know at all who is actually attending this new cycle. We know who is not coming. No one from the left wing is coming. Even the socialist head, Olivier Faure, said this morning that he does not want to be complacent with this parody of democracy. The far left has called for destitution of the president, and the communists have called for protests in front of regional public buildings.
Gary Conan in Paris, thank you very much indeed. Cazeneuve seems to be the name still in the frame. We'll see whether or not he ends up being the candidate that we ultimately end up going with in France. That wraps things up. US futures pointing to a mixed, flattish start to trading a little bit later on, but you do not want to miss Bloomberg Technology half-hour special tomorrow. We have an exclusive interview with this man. The NVIDIA CEO, Jensen Huang, is going to be talking to Ed Ludlow. I am really excited about this. This is going to be a fantastic conversation. Up next today, it is The Brief, Manus Cranny in New York. This is Bloomberg.